In most real estate transactions, when a buyer is purchasing a property, they will typically receive a mortgage loan from a financial institution or a bank. Whether you have insufficient qualifications like credit, looking for negotiable terms, or just a faster closing, what if I told you there was another creative way for you to secure a loan on your transaction? My name is Asif from AK Real Estate, and today we are going to be getting into what is seller financing in real estate and how it can help you. Before we get into the video, if you're looking for any videos similar to this one that you're watching right now, please go ahead and subscribe to the channel if you're new, and go ahead and check out our Instagram for many videos similar. Let me introduce you to the term of seller financing, or otherwise known as owner financing. In this scenario, different from your lender at the bank, the seller of the property will act as a lender. You might ask, how is that even possible, and how does all of this work? Buyer and seller will come to an agreement on all the terms and conditions of the sale, including loan duration, repayment schedule, interest rates, and other key details. A key difference in seller financing that can benefit both parties is the ability of negotiation. Not only can you and the seller negotiate purchase price like every other transaction, interest rates would typically be higher than the ones that you'll see at the bank, as this does provide the seller some sort of incentive to finance the deal. Also, loan terms. Here in Canada, most homeowners are on a 5-year mortgage, which is amortized over 25 and 30 years. However, in the US, most homeowners are on 30-year mortgage terms. The beauty of seller financing is that the terms can be changed between the negotiation between you and the seller. It could even include a payment structure that would include a balloon payment in the end of the term of the loan. Similar to any transaction, documentation is extremely important in a seller finance deal. A promissory note is to be signed by the buyer, which will detail financing information we discussed earlier. This could potentially include information on the potential of failed terms from the buyer, including consequences, defaults, and foreclosure remarks. In addition to documentation, laws are still in place. State laws may show some states that have terms that can be impactful to the loan. Usury laws may regulate interest terms, or foreclosure laws may outline the rights the seller has in the deal. What if you're the seller? With negotiable terms, higher purchase price, and higher rates could sound like a no-brainer to go this route. Many drawbacks have most sellers sticking to the traditional route. However, we can talk about the heavy risks that scare most sellers from getting into this. We could talk about the heavy risk that this provides to the seller, the risk of default if the buyer cannot pay, the responsibility of structuring your deal, or the extra hassle with the communication of the buyer, receiving payments, and much more makes seller financing that much more complicated. Seller financing can be used for all types of property, commercial, residential, or even your investment properties. The main benefit for buyers is to be able to structure your deal. If you have insufficient credit or looking for flexible terms on your deal, this is a great way for buyers who are looking to get into their first property or continue to build their investment portfolio. This is just a quick rundown of what owner financing, or otherwise known as seller financing, is known for in real estate. If you guys have any questions or additional comments, any experiences you guys have using seller financing, please feel free to leave it in the comment section below. If you're looking to see more content like the one that you're watching right now, please feel free to subscribe to the channel. And if you're on Instagram, please check out the AK Real Estate if you're looking to see daily content about all of these topics. Thank you everybody for watching. We'll see you on the next.